I am not of the belief that Biden is going to win. I think that Trump is going to win. As the anticipation of that builds and builds and builds, I think that's going to be expressed in the market. The election will be a vol event.
Well, thanks, Brent. It's great to speak to you. It's such a great time at the moment. It's such a great, important talking point.
Yeah, you know, I got to say, it's super interesting. I thought it was very interesting last time. I actually think it's even more interesting this time.
Let's start with the really big picture situation. You know, if you look at Real Clear and the various sort of average polls there, you've got Biden ahead by about 7 percentage points, predicted by Biden ahead by about 6 points. You go into the race for the House, you look at 538 podcasts, they've got something, you know, the Democrats leading the House quite convincingly, getting the 270 votes. The bookie markets are a little bit tighter, and the race for the Senate's, you know, really wide open at the moment. I'm in Australia, you're on the ground in the US. How are you seeing this evolve at the moment? How are you seeing the sort of big picture election unfolding ahead of you?
I do think that the race is much closer than people think. And I am not of the belief that Biden is going to win. I think that Trump is going to win. You know, I thought he was going to win in 2016, but I had a pretty high conviction that he was going to win in 2016. I don't have that same conviction level this time. I think he is still going to win, but I think it will likely be much closer than well, I guess last time was pretty close too, right? But I think it is going to be, at a minimum, it'll be a much closer race than the people who have Biden winning think it will be.
It's an interesting one. You know, if you go into the volatility structures in the market at the moment, you've got, you know, the VIX curve. If you look at the term structure now, with November having a slight premium, or having the biggest premium, you know, for a while against October. You go into the FX market, and 2-month dollar yen volatility is trading at, you know, an all-time high relative to 1-month implied volatility. Same in dollar CNH, dollar CAD. Yeah, so the market is starting to see this more of a volatility, and it's really interesting that you talk about the idea of Trump having more of a say here and having a better chance. Do you see the election being a volatility event? You know, and at what so does it become a volatility event? Into the election or post-election?
So as of right now, and I always say I reserve the right to change my mind based on the next piece of news that I get. But as of right now, I actually think there's going to be volatility leading up to the election. I think the conventional wisdom is now that we're not going to get a clear decision on election night or even the next day. I think the conventional wisdom is it'll take at least a couple days and perhaps a couple weeks or months to get a final answer. Yeah. And I think that that's right. But I think as the anticipation of that builds and builds and builds, I think that's going to be expressed in the market. And so while I actually am of the opinion that the election will be a vol event, you know, I would say that the potential is there for a lack of vol surprise, and that we get some kind of a clear answer, right? Maybe the election is much more clear than everybody's now expecting it to be. And if that's the case, then I think you could end up having a thing where realized vol isn't as high as implied vol. Right. Now, that's not my opinion right now. I do think it's going to be a vol event, but I guess I would just say I won't be shocked if we get vol leading up to it. I won't be shocked if there's some kind of a relief on the night of. So I would be, as we get closer, if the vol starts to play out, I'd probably be watching that potential for it to not be as volatile, just as maybe a side bet or something to consider.
Yeah, I think one of the interesting points now is the Supreme Court. I mean, next week we've got the first debate, and there's going to be a large focus on the Supreme Court on that. And you know, I'm saying this before we actually get the appointment. It's been said that Donald Trump will announce the nominee this coming weekend. Have some gapping risk on the back of that. But if we do see a conservative, well, it's very likely we're going to see a conservative appointment coming through, rush through, and we're going to see that 6-3. Situation. Now, you know, if we do see a contested, if we see a very close election, which is, you know, in your case, it's going to be the case, and also Donald Trump saying that he's not going to take, well, he's not poo-pooing the idea of rejecting a close call and a peaceful situation. How much do you think that Supreme Court split could actually influence the election going forward?
Well, I actually think it's going to, well, regardless of whether it ends up being a big deal or not, it is going to be a big deal leading up to it. I mean, this, you know, if you thought Brett Kavanaugh was a contested selection, then my guess is that this is going to be extremely highly contested as well. Now, I'm relatively certain that Trump is going to nominate a female for the court, and perhaps rightly so. But so that might make it a little bit harder for for the Democratic side to go on the attack the same way they did previously. But I still expect it to be extremely contested. And I do think it's important because I think there's a legitimate shot that this goes to the Supreme Court for a decision. I will say this, I think it was, what year was it? Was it 2000 when Bush won versus Gore, and it didn't go to the Supreme Court, right? They were able to negotiate a deal or whatever. And, for the good of the country, Gore stood down, so to speak. I don't think that happens this time. I can't see either side giving in. I can't see either side accepting the other side winning. And that's why I said,
you go back to 2000, and I think the S&P fell 10% as we were into that contested situation. So maybe we're looking through the looking glass and seeing a similar situation playing through in this time around as well. But the other question that we've got is the social fabric of America being tested about this. I mean, if it gets really close and no side looks like they're going, and Trump doesn't accept it, if Biden doesn't accept it, I don't want to talk necessarily about riots and civil wars and all those bits and pieces, but there's no doubt there's going to be tensions playing through. And how much do you think if that happens, that will play into the market psyche as well?
I think it will play into it, and that's why I think if it's even relatively close, I would expect protests on either side. I would say that I have a little bit of a unique view on this because I grew up in the Midwest in the state of Nebraska, which was very rural, very red, very, very conservative. And I still have a lot of family and friends back in the Midwest, and they just see the world much differently than we do in San Francisco and Los Angeles and New York and Miami. I mean, we just kind of have a fundamentally different view of the country. And, I think that plays out into politics. And I think for whatever reason, the people on the coast just will not, they just have a hard time accepting that the people in the Midwest are smart, intelligent people who want the best for the world. They have a different worldview, but they're still good people. And I think that there's this opinion that permeates on the coast that if these hillbillies from Missouri would just listen to us, the whole world would be much better. Right. And every time they kind of personify that position, it just makes the people in Missouri and Kansas and Nebraska even more, it gets them an even bigger chip on their shoulder. So I don't think it's been helpful, to have 4 years of protests against Trump. Now, I'm not a Trump fan. I didn't vote for the guy. But at some point, I think you got to just get on with it as well. Yeah.
Right. Let's go into the dollar. Brent, you're well known for your milkshake theory. But,
yep.
I'm really interested because the dollar is so key, and I think what we started to see financial conditions tighten a little bit in financial markets. The S&P started to roll over, tech started rolling over, and I think if I take my view on what's happened, obviously the dollar index fell below 92, the trade weighted dollar, has been absolutely smashed. I think if you look at the dollar smile theory, the rest of the world sort of converged and caught up, and some of that capital was redistributed. We saw an absolute collapse in real yields on a relative basis, not just in the US, but on a relative basis as well. Your 5-year real yields got down to a negative 175 basis points or so, 146 basis points. The dollar started to move up a little bit higher. So I want to touch on your theory about what happens with the dollar in the election and start off with what the bookies, I'm going against your theory here, but let's just have a look at what the bookies see as a more probable situation, which is a Democrat clean sweep. Now, if we were to see the Democrats, not with Biden just in the White House, but also retain both chambers in Congress, my view is personally that would actually be a big dollar positive because it would be, it's all about fiscal at the moment. But how does that shape your dollar theory if we get a Democrat clean sweep?
Well, I think in the very short term, I do think that if Biden were to win, it would probably be dollar negative. So I probably disagree with you a little bit there, mostly because I think the knee-jerk reaction at least from the people I talk to is that, Biden is going to take the deficit even more. The Democrats are going to spend even more than Trump. And, we're going to be well on our way towards MMT, so to speak. Yeah. Now, I largely don't think it matters. I think it matters for the first couple months after the election. But after that, I kind of feel like we're kind of in this fourth turning, and we're kind of headed down this road, and the dice have already been cast. It's just a matter of when they stop rolling. And I don't know that it really matters that much who the president is. I do think that in general, I think Trump probably is better for a stronger dollar, but I don't think it matters that much, because what I think happens as we move forward is I think the entire globe is in a global slowdown. There's been this big, popular theme that we have now broken the back of deflation. Inflation is here, and we're now going to start see inflationary effects showing up in markets. I agree we're getting close, and we're probably not far from that, but I don't think we're there yet. And in fact, I think we are still in a deflationary setting. And in fact, if we weren't in a deflationary setting, the central banks wouldn't have to be doing what they're doing. So I think they're reacting to the deflation. And this goes to your real yields. With yields going lower, and if inflation is actually falling rather than rising, and you're subtracting a negative, you're actually adding. So real yields are now rising a little bit, right? And you've seen gold start to sell off. You've seen the dollar start to rise as this has started to happen. And so what I think happens over the next couple of years is, again, over the first few months after the election, it's kind of a toss up. It probably, the dollar probably strengthens more on a Trump win than a Biden win. But over the next couple of years, what I think happens is, a number of foreign yields around the world start to rise, not because of the good inflation. You can have good positive real yields, and you can have bad positive real yields, right? And so if you have the good positive real yields of inflationary effects, then I think that would probably be good for the emerging markets. But I don't think that's what's going to happen. I think we're going to have the bad real yields, because I think yields will start to rise on counterparty concerns because of the global slowdown. And if yields start to rise because you want to get paid more to own that subject credit, then that's not a good positive real yield, right? So I just don't see how we get out of this mess of the dollar. I've made my position on the dollar pretty clear. The timing is always hard to get right, but I still fully feel that this is going to play out over the next couple of years.
But if you've got Trump at the White House, and you've got the Democrat, if you end up having a split Congress,
yeah,
we need fiscal. The Fed have made it very clear they need fiscal to generate the PC up to 2%. I mean, it's pretty clear that the markets are now reacting because economics are stagnating. We need more fiscal. But if you've got a split Congress, and we haven't even been able to get CARES 2 through, I mean, how on earth do inflation expectations push higher unless we see a blue sweep? And that's my view, is that's the only way is we're going to get the fiscal impulse through from a Democrat and a clean sweep. But then again, of course, you could see, we're not ruling out that we could see a red sweep as well. We could see the Republicans getting all three chambers. We can't take anything.
Well, and I listen, I actually think that's possible. I don't think it's likely, but I think it's possible. So I don't think you can rule that out. But the other side of it is, let's just say it stays the same. Let's say that Trump wins, the Senate stays Republican, and the Democrats, or the House stays Democrat. The last 4 years have really been about just, we got to get Trump out of there, right? Now, if he happens to win again, now the Democrats have to wait 3 years to put up their next candidate, and it's no longer about Trump. Now it's about the next guy. Now, whether it's Pence or somebody else that they'll be running against, I don't know. But if we're still in kind of these effects of COVID, they've got to get reelected too. They've got to get reelected in order to keep the House.
That's right.
And so they're going to want to please their constituents, and I don't think that they can do another 3 years of anti-Trump. I think they will have to somewhat play the game. And I think that we will get a massive stimulus package sometime next year, probably infrastructure as well, regardless of who is president.
Right. Okay.
Because I think the Democrats will want to, they'll want to please their constituents as well, and the constituents are going to be demanding it, right?
I want to touch on the Fed puts, because if you look at the wording in the September FOMC meeting, they're now talking about fostering accommodative financial conditions, not actually using them as a smooth transition mechanism for a functioning market, but they're actually going to use QE and asset purchases to foster better financial conditions. So it seems to me that strike price, the strike on the Fed put is higher than where it would used to be. And, talk to me about the NASDAQ and the S&P and the equity market. If we see volatility really picking up and the market really rolling over, at what stage, firstly, do the Fed start making noises about, doing QE? And secondly, does it have any effect on markets, given that we know that QE is deflationary?
Yeah, well, I guess that would be the point that I would make, right? Is that, they've been doing QE for a decade now, and yet we're still fighting deflation. And I kind of have a different opinion on QE than a lot of people, in that I think it's temporarily inflationary because people believe it's inflationary, but
Yeah.
then when reality, and then 3 or 4 months later, reality hits them, and they realize it's actually not inflationary, and there's not as much liquidity as everybody thinks, and then they roll over again. And like I said, I think I do think that the Fed put is higher. I do think that they will do more QE. I think that it's becoming increasingly like the boy that cried wolf. I don't know that it will be as successful the next time as it was over the last 3 or 4 months. And the other thing I would say is, just because you do, and it kind of goes to QE being, inflationary or deflationary, I've said that they're going to have to print a lot more than anybody even imagines for it to be inflationary. Now, that doesn't mean they won't do it. They maybe will. But a $10 trillion balance sheet, I don't think that's inflationary, because until they get the banks to lend, it's not going to have the inflationary effects that many people think. And right now, if you look at the extension of credit in the United States, the bank lending is actually contracting. Loan standards to get a loan, the standards to get a loan are actually getting tighter, not easier. So despite this popular narrative that there's all this liquidity out there, the reality is a little different. And so I do think that the interesting thing is today, on March 9th, the equity markets had a 3-week pullback of about 10 to 15%, and the dollar was around 94 and change. Today, we've had 3 weeks of an equity pullback, about 10 or 15%, and the dollar's at 94 and change. I kind of find that interesting. Now, that doesn't mean that we're going to have a repeat of March, but we're kind of back to where we started a little bit. We're pretty similar levels on all these asset prices. And I don't think that the inflationary effects that many people just assume are going to show up are going to show up. So I think there's going to have to be more stimulus.
Yeah.
And I should say, it's not just in the United States either. Royal Reserve Bank of Canada has started to, or of Australia has started to talk about, tight or loosening monetary policy. Canada just had their speech from the throne tonight, where Trudeau is talking about, spending more and doing more stimulus. The Bank of England, there's been rumors they're going to go negative. So this is a worldwide phenomenon. It's not just a U.S. thing. And I think the people that think that just because the Fed is printing a lot, the dollar's automatically going to fall, I think it's a little bit more difficult than saying that.
Going back to the election itself, on the day, what will you be watching? There's a lot of swing states that really could dictate things, things like Florida, Arizona, those kind of things. So obviously you've got skin in the game, you've got capital with your fund. When you're managing risk on the day, what will you be looking at, and how will you be looking to react on the day?
Well, I think the biggest thing is you have to be prepared to either be wrong or have a surprise. And so if we get a lot of risk off going into the election, I will probably be looking to put some risk on, or at least a little bit. And if we get the opposite, if we stay at these levels or get a rally into the election, well, then I'll probably be looking to hedge that risk out. In general, I think we're probably already positioned pretty well. I don't think we have to do a lot, but as we get closer, as we get some more information from the mail-in balloting, that'll probably start to, seep out a little bit. I think that Trump is going to win Florida. I think he'll probably lose Arizona, but he could win. I think Arizona is really interesting. I think the polling shows he's going to lose, but it wouldn't shock me if he wins. Yeah. I think Michigan is polling Democratic, but again, I think it's probably closer than many people think. I think there's a lot of people out there who hate Trump personally, but also look around and say, you know what? I could, as long as nobody knows I voted for him, I'll vote for him. In other words, I think there's probably a lot of people that voted for him 4 years ago that won't admit it, that might do it again. So I just don't think it's quite as clear as many people think. I know he's not a popular guy, in the general media, but I think there's a lot of people out there who his message does resonate with.
I want to touch on one last thing. The idea about an end of globalization. We've seen a much more fractured world under what's been happening. Trump and Xi, and Trump and Europe and the UK and other factors as well. I mean, a lot of that could be down to the idea about going into the election. If you are right and Trump does retain the White House, how do you think those relationships with President Xi will go? Do you reckon it will continue, or do you reckon he'll actually just try and repair situations. How do you see globalization under Trump if he is to take the White House?
I think in some ways he'll be even harder than he was the first 4 years. Every president in history has always wanted a second term. And so while he came out tough and while he did talk tough, at the end of the day, he wants markets higher so that he gets reelected. So he had to kind of back off a little bit. But once he's got his second term, I think that he'll be even tougher. That's just, and not just with Xi. I think with Europe, he'll be tougher. He'll probably be tougher with Canada and Mexico. He'll probably be tougher with everybody. But the interesting thing that regardless of what you think about Trump, one thing that I think most people would agree is that he has brought to the forefront the idea that perhaps, treating China with kid gloves was not necessarily in our best interest. And so regardless of who wins, I don't think anybody can go easy, quote unquote, easy on China. I don't think we're going to be rushing back to them and, as our best friends. Even if Biden wins, I think that he will have to be fairly tough on China. Senator Warren, when she was still in the race, she was talking very tough on China. So I don't think it's like Trump or Biden. One's gonna hate China and the other one's gonna love them. I think we're moving towards a decentralized world. I think we're moving away from globalization. It's kind of, I mentioned The Fourth Turning earlier. Anybody that's not read the book The Fourth Turning, I think should absolutely do it. I think we're in the fourth turning, and I think that's when things get broken. And I think and then hopefully in 5 or 10 years things will start to get put back together. But I think we're still in the breaking stage, unfortunately.
And last question, looking ahead, regardless of whether we've got a blue sweep or whether we've got a mixed Congress, whether Trump's in power, what's the you go into 2021? What's the thing that keeps you awake the most at night? What could really derail the world? I don't want to be that guy who always thinks about the negative. There's a lot of positive stuff that could go through. But if we're managing risk and into 2021, what is it that keeps you awake the most? Is it economics? Is it the strong dollar? Is it?
I think I've said this before and I'll say it again. I think the dollar is the most crucial thing for the next 2 years. I think the whole world is kind of one trade, and I think the dollar is going to dictate what happens. But to be honest, the thing that probably keeps me awake the most is, so I manage money primarily for individuals, and so and I know them all. They're I've gotten to know them and their families, and so I'm kind of helping them be responsible for their family's future. So it's not just like managing a mutual fund where you don't know the end client. And historically, you could do a 60-40 portfolio, and most likely things would work out okay. I'm not sure that's the case anymore. I think we're going to see a transition from doing a 60-40 portfolio, and as someone got older, you transition them more to bonds. I don't know that that's necessarily a safe thing anymore. Right now, I think it is. I think bonds are okay right now, U.S. bonds. But I think we're moving into an environment where bonds might be the worst environment in the world. And trying to transition a client who's moving into retirement, from what would traditionally be a bond-heavy portfolio to finding whatever else is the right thing, whether it's stocks or precious metals, commodities. That's kind of the transition from where we're at now to that is probably the thing that I think about the most.
Well, I just want to say thanks for your time, Brent. It's been a fascinating debate. I think it's going to be a very volatile event. I think not just leading into it, but actually trading around. I think it's certainly going to be a lot more convoluted than 2012 and 2016 with all the mail-in voters. And, I think we're going to probably see a bit more to rising tensions in markets playing through, but some interesting views. And I just want to say thank you for being generous with your time. So good luck trading it.
Thanks, you too. Thanks for having me.